So firstly, economy cycles, whether it's 8 years, 10 years, 12 years, 14 years, it's a cycle. Everybody knows that, but everybody still behave in the human nature. When it's rising, we keep on buying the shares, even though we know it's a bubble. You think it never ends?
We're thinking, what are your thoughts on the recent exorbitant condo new launch prices, PSF since the second half of 2021? And will this continue to be the new norm, or will there be any revision on this trend based on the historical data?
Right. I think that I shared briefly just now in regards to the last decade, sentiments drop, volume drop, price has never really reduced. So back to this fundamental, I just want to share with you that in fact, DBS has projected that average PSF will hit 3,000 comes 2030. And that was an article that was done in 2019, if I'm not wrong. So at the rate that we are at right now in year 2022, I think that is gonna be happening, okay? And the point of the matter here is that because we hit another threshold of, instead of $1,000 per 1,008, 1,009 per square foot, right now we are seeing the big two. And when you see that a big shift in the first numerical number, many people are taken aback, right? Just like what the psychology of why people price $1.99, right? When they sell you something and not selling you $2 or whatnot. So it's the same thing. In fact, I talk about a marginal jump. It's not drastic comparing to the past, especially from fourth quarter 2009 all the way to 2013, when we talk about a 62% high. So yeah, of course, when we see government start introducing more cooling measures, then you know that we are basically accelerating beyond the fundamentals of how real estate is supposed to be moving in along with the economic fundamentals. All right. So I hope that answers your question. Okay. So I guess over here today, what we really want to cover on is interest rates. So I shall not dive too or deviate too far from that topic altogether. So again, back to David, just one last question. Is there anything that you feel that today's attendees should know given this interest rate environment that we are facing right now? Is it something new, or is it something that it has happened before, and how are we going to brace ourselves for it?
I actually feel that it's human psychology, right? So whatever Claire said, I add on to that house exorbitant price thing. Okay, so firstly, economy cycles, whether it's 8 years, 10 years, 12 years, 14 years, it's a cycle. Everybody knows that, but everybody still behave in the human nature. When it's rising, we keep on buying the shares, even though we know it's a bubble. You think it never ends, right? So, however, share prices over time also increase. If the graph is always upwards, right? That's why they call dollar cost averaging, right? That's an investment strategy if you want. At the same time, there's also property prices also always increase. So now you say 2,000 is exorbitant. Relative to what? 10 years ago when it's 1,002, but 10 years ago, inflation is 3%. That is compounded inflation, easily will be 40% increase, 50% increase. You add together, 1,008, 2,000, correct what? It's not wrong what, it is correct. Your Starbucks 10 years ago is 450, today is 750. It's also almost 200%, except that you don't see the pain because I still can afford 750 for some. Your coffee was 70 cents, now it's $1.30. It's also 100% almost there, right? It's the same thing, it's inflation. So it is actually something that, is it exorbitant? It's exorbitant relative to 20 years ago, where your uncle, grandmother will tell you, chicken rice, 5 分钱, 5 cents, you know, because there are some non-Chinese. You know, it's exorbitant relative to what it is. Honestly not exorbitant. I'm not saying that it is not high. There's highs and lows, and to beat the highs and lows, you need a consultant like KS to help you find the correct pace. That's the value add, because you make 10, 15, 20% more than your friend makes you happy. But over time, it should increase all the while. Then if you go and buy those exorbitant luxury good, 20, 30, 50, 80 million, don't count GCBs, because it's limited, but condominiums, Sentosa, the sale, then you are actually taking bigger risks. Well. So for example, I'm not the agent here. Okay, for example, what's that called? The one just launched one. Is that
one per bank?
One per bank. Is that good or bad? I have pros and cons I can tell you about. But then good or bad, nobody knows, because it is a higher risk area. Sporting Road Park got 2 condos. One make money, one never make money. Both TOP same time. How to answer? I don't know. Ask KS, not me. Okay, the whole KS story, the whole cocoa pump, that whole stretch, one make money and the rest all break even or lose money. How come? I don't know. Ask KS again, right? Not my Chuan Hang. So yeah, so that's what I'm saying. Like interest rate high, low, recession high, low. It is normal, it's cyclical. How you brace for it? The government already helped you brace. The stress test is 3.5% for TDSR. So if you are within the stress test, you can afford it, one. It's just, instead of go out 4 times a month, I go out 3 times a month. The difference is not crazy high. If you are buying a house that you can afford, not overstretching yourself. Can I answer the question on the chat? I have a graph. SIBOR and SORA, that's no formula, is parallel because it's based on the market interest rates between institutions, whether Singapore interbank offer rate is institution bank to bank or Singapore overnight rate average. Institution is also like, you use a trading platform to trade US shares, right? Then you have leverage. You buy overnight. Who's going to lend you the money to buy? Somebody has to borrow money from somewhere to buy for you. So that's where institutions to lend and borrow money. I have a graph that shows the Fed rates to the 3-month SIBOR, the SORA. I'm just going to put it in the chat, then you all just download from there.
Just in case everybody is wondering what is Baey answering, what question is Baey answering, right?
Oh, yeah,
so there's a question whereby there is a conversion. Is there a conversion formula between SIBOR versus SORA rates? So this is what he's trying to explain to everybody.
Re-key in. Okay, so I'm just going to paste that. Then I'm going to keep quiet.
Amazing, great. So guys, I think I shall not hold you up anymore. And again, I think David has really, shared his honest opinion. And again, I guess all of us has our own so-called professional opinion on what makes or what ticks for us and whatnot. So it may not work for everyone, but these are based on what we feel is the best for different consumer and different strategy, like the kind of strategy that Baey has mentioned, just like the exit strategy I have planned out for properties. He also plans that on the interest rate level. Okay. So again, really, we thanks David for being here tonight with us to share his insights, and of course on this dialogue on a more spontaneous level where questions are thrown in, at every minute as he's sharing. And of course, it's been very nice to spend this evening with us to uncover all these SIBOR and SORA and of course historical data and whatnot.